This is Perspectives, a bi-weekly investment podcast brought to you by Escala Partners. In a world cluttered with information, Perspectives cuts through the noise to bring you insights and commentary on global financial markets, economics, and geopolitical news and events.
Welcome to Escala Investment Perspectives. While March was a period of volatility and panic as war broke out in Iran, April is proving to be the opposite, with equity market losses now entirely reversed and the Nasdaq hitting new highs. You could be forgiven for thinking everything has returned to normal. However, while equity markets seem to be looking through all the noise, there are some significant changes underway that we need to be aware of. And of course, to talk us through some of these changes is our Chief Investment Officer, Tracey McNaughton. Welcome, Tracey.
Hi, Ed.
Tracey, I want to start with a question we had from a client last week because it really cuts to the heart of what everyone is trying to figure out right now. They asked, is the current state of the world only as permanent as Trump remains in office? In other words, is this just a phase or are we actually living through something more structural? I know you have some views on that, Tracey.
Yeah, I do. It's a very good question, and it's one a lot of people, a lot of our clients are asking. The honest answer is, I think this goes well beyond any single political leader. I think what we are seeing, more than just political disruption, is a breakdown in trust. And that has much deeper and longer lasting consequences. There's a powerful idea from some research that I looked at recently that describes trust as a kind of lubricant in society. It allows systems, economic, political, and social, to function smoothly. And when that lubricant starts to wear away, everything becomes more frictional. Transactions slow, they become more expensive, cooperation weakens, and relationships, whether between individuals or countries, they start to fracture.
So even if the political backdrop changes, the system itself has already shifted.
I think so. As we know, trust is slow to build and very fast to lose. Politically, we can spend decades creating stable alliances, reliable trade partners, and a shared understanding of the rules of the game. But then a relatively short period of unpredictability can call all of that into question. And once that doubt is there, behavior starts to change. Countries start asking different questions, not what's the most efficient supply chain, but rather who can I rely on if things go wrong? And that's why we're seeing such a rapid shift towards nearshoring, onshoring, and friendshoring. These aren't temporary adjustments, they're structural responses to a world where trust can no longer be taken for granted.
I see that shift is already well underway.
Oh, very, very much so. Supply chains are being redesigned in real time. Companies are accepting higher costs in exchange for greater certainty. Governments are actively encouraging domestic production of critical inputs. I'm sure we will hear more about this from our own Australian government in the upcoming budget. The government is doubling down on industrial policy, investment in renewables, batteries, EVs, critical minerals. Support for domestic manufacturing and supply chains will likely feature quite heavily in that budget. So this is a fundamental rewiring of economies around the world, and it doesn't stop at trade. It extends into alliances and the geopolitics.
So let's talk about that because alliances have always been the backbone of the global system.
They have, and they rely almost entirely on trust. If you think about NATO, its power doesn't come from a central authority. It comes from a shared belief that members will support one another. That credibility and belief is everything. But when that credibility is questioned, when countries begin to wonder whether commitments will be honoured, the entire structure starts to weaken. And that uncertainty forces countries to adapt. They hedge their bets, they diversify their relationships, they build in redundancy in their supply chains. They form new partnerships even as older ones become less reliable. And we're seeing a real alignment here.
Realignment has second-order effects in places people might not immediately think about.
Exactly right. One of the most interesting and potentially underappreciated areas is the Gulf states. For decades, countries like Saudi Arabia and the UAE have been working incredibly hard to reposition themselves. They've invested heavily in infrastructure, in tourism, finance, and technology, all with the goal of diversifying away from oil. But underpinning that entire strategy is a simple idea of trust. Trust that it's a safe place to live, trust that it's a stable place to invest, and trust that the rules won't change unpredictably. Now, in a world where geopolitical tensions are rising and global trust is eroding, that narrative becomes harder to sustain.
So even if nothing changes domestically, the global context could undermine that progress.
That's right. If international investors become more cautious, if talent becomes more hesitant to relocate, if capital flows become more selective, that diversification effort could slow. And that's not a small issue because those economies are in the middle of a transition. They're trying to move from one model to another. If that transition stalls, the implications could be significant, not just economically, but socially.
Tracy, that's where the historical parallels start to come in.
Well, that's right. If expectations around growth and opportunity aren't met, you can start to see social tensions build. We've seen that before in the region, most notably during the Arab Spring protests in 2011, 2012. That period was driven in part by economic frustration and a lack of opportunity and rising inequality. And while the context today is different, the underlying dynamics are the same. So when we talk about trust breaking down, it's not just an abstract concept, it's a very real thing. It has implications for how economies evolve and how societies respond.
So, Tracy, to bring it back to the original question, this isn't just about who's in office.
No, it's much bigger than that. We're seeing a shift from a world where trust was assumed to one where now trust has to be earned and constantly reassessed. And I think that changes everything.
So, Tracy, let's move to the second theme, which builds directly on that idea, the age of chokepoints. It's a phrase we're hearing increasingly. So tell us about it.
Well, at its core, it's about recognizing a paradox in globalization. For decades, we optimized the global economy for efficiency. We built highly specialized supply chains, concentrated production in the lowest cost locations, and relied on just-in-time delivery. And it worked incredibly well until it didn't. Because in creating that efficiency, we also created concentration, and concentration leads to vulnerability. Those points of vulnerability are what are now called choke points.
Of course, we've seen some pretty stark examples of that.
Well, we certainly have. Energy is probably the clearest one right now. Europe's reliance on Russian gas created a situation where a single supplier had enormous leverage. When that supply was disrupted, the consequences were immediate and severe. But, energy is just one piece of a much broader picture. We're seeing choke points emerge across semiconductors, where a handful of companies dominate advanced chip production, critical minerals essential for batteries and renewable energy, fertilizer, of course, and agricultural inputs, which directly affect food security, and even financial infrastructure and data systems. And What's changed is that these choke points are no longer just economic, they're geopolitical tools, weaponized, if you like.
Tracey, you used the word weaponized earlier.
Yes, and that's exactly what's happening. Control over a choke point allows a country to exert pressure without firing a shot. It's a form of economic statecraft. The US and China have been doing this even before Trump came to office. Biden was doing it. Restrict exports of a key material, limit access to technology, disrupt a supply route, and you can impose real costs on another economy. And that's why this is such a defining feature of the current environment.
Of course, some economies are more exposed than others.
Oh, yes, very much so. Countries like Germany and Canada, they are large export-oriented economies. They've benefited enormously from open global trade, but that model assumes stable access to inputs and markets. In a world of choke points, that assumption no longer holds. So the challenge becomes twofold. First, protect against vulnerabilities, ensure that no single supplier can disrupt your economy. And then second, build strength through partnerships, work with trusted allies to create more resilient systems. And that's where the concept of trusted interdependence comes in. This is something that Canada's Prime Minister Mark Carney is talking about. It's not about abandoning globalization, it's about redesigning it.
So, Tracey, what does that redesign look like in practice?
It looks like diversification, redundancy, collaboration, that sort of thing. We're seeing countries co-invest in supply chains, develop domestic capabilities, and align standards with trusted partners. If you think about critical minerals as an example, it's not enough to have the raw resources. You also need the ability to process and refine them. And that's a key issue for Australia. This is a lesson we are learning. We're resource rich, but much of the refining capacity sits elsewhere. That creates a dependency, a choke point. So the focus is shifting toward building those capabilities locally or within a trusted network.
So efficiency is no longer the primary objective.
That's right. The priority has shifted from efficiency to resilience, and that has implications, of course, for cost, for inflation, and for how companies operate. Building redundancy isn't cheap, but in a world of uncertainty, well, it's necessary.
Tracey, this is happening across multiple sectors all at once.
Exactly right. Energy, technology, agriculture, finance, it's all being reassessed. Resiliency extends now to cybersecurity. The recent news of the new model from Anthropic that can find, this is Mythos, it can find ways to break through company firewalls. That's raised alarm among the big banks in the US and is one of the reasons why Anthropic are not releasing the model to the public, at least not yet. The broader point is that we're moving into a world where economic architecture is being actively shaped by geopolitical considerations and its impact on trust. Geopolitics has a big influence now, and that's a very different environment from the one investors have been used to over the past few decades.
Tracey, with all of that as the backdrop, you mentioned geopolitical tensions, shifting supply chains and choke points. It'd be reasonable to expect markets to be under significant pressure. And yet, particularly in the US, equities have been remarkably resilient. Why is that?
Well, because at the end of the day, fundamentals still matter. And right now, the fundamental picture, particularly in the US, is stronger than many people expected. Corporate earnings have held up well. In some sectors, they've been very strong. A great example, and this is outside of the US, but a great example is Taiwan Semiconductor Manufacturing Company, TSMC. Their latest results highlighted continued strength in demand, particularly driven by AI and advanced computing.
So even with all the uncertainty, the underlying growth drivers are still intact.
Well, they are, and in some cases, they're accelerating. The demand for computing power, for data processing, for AI infrastructure, it's growing rapidly. And companies that sit at the center of that ecosystem are benefiting. More broadly, US companies have demonstrated a few key strengths: pricing power, allowing them to protect margins; operational efficiencies, enabling them to adapt to supply chain changes; and a continued focus on innovation. All of those factors have supported earnings growth, which in turn has supported the US equity market.
So equity markets are effectively looking through the noise.
To an extent, yes, but I'd frame it a little bit differently. Markets, I wouldn't say, are ignoring the risks. What they're doing is more incorporating those risks. They're also recognizing that certain parts of the economy are still performing very well. What's interesting is that valuations are increasingly reflecting quality and resilience. Companies with strong balance sheets, reliable earnings, and exposure to structural growth themes are being rewarded.
Tracy, how should investors think about this environment?
Well, it requires a more nuanced approach, I think. You have to recognize that the world is becoming more complex, more fragmented, more uncertain, and at the same time, there are still powerful growth drivers at play. The key is to focus on businesses that can navigate that complexity, companies that are not just growing, but are resilient to disruption.
So in a way, resilience becomes the new premium.
Yeah, that's a great way of putting it. We're moving from a world where markets rewarded efficiency and scale to one where they're increasingly rewarding adaptability and durability. Well, that's a fairly subtle, but it's an important shift.
Tracy, if we bring it all together, what we're seeing isn't just a temporary disruption, it's a deeper structural shift.
That's right. At the heart of it is a breakdown in trust, as we started this podcast with, which is reshaping how countries interact, how supply chains are built, and how economies function. And then layered on top of that is the emergence of these choke points, strategic vulnerabilities that are being actively managed, and in some cases, they're being weaponized. And yet, despite all of this, the fundamental drivers of growth, innovation, technology, earnings remain intact.
The world is becoming more complex, but not necessarily less investable. Maybe we just need a different lens, a greater focus on resilience, on trust, and on understanding how these structural changes are playing out. Tracy, it's a great discussion as always, but that's all we have time for today. Hope everyone enjoyed the update. And of course, we look forward to you joining us for the next update. In the meantime, please take care and stay safe. Thank you.
Thank you for listening to Escala Perspectives podcast. Be sure to subscribe to this podcast on iTunes. You can connect with Tracey by visiting escalapartners.com.au. Escala Partners is a corporate authorised representative of Escala Wealth Management, which holds its own AFSL. This podcast has been prepared without consideration of specific client investment objectives, financial situation, or needs, and is for general information purposes only. Please don't rely on it for the purpose of making an investment decision. You should seek independent financial and taxation advice prior to making any investment decisions in relation to any of the content considered in the podcast, and consider any relevant disclosure documents. If you require any further information regarding the matters discussed on the podcast, please contact Escala Partners.